All right, what's up, everyone? Welcome back here for another video. Today, I want to talk a little bit about the traps, the hidden traps of day trading. And you need to be aware of this, especially if you're a beginner trader, because it will give you the best possible chance to becoming a profitable trader. And it does take a long time. So you're going to need to know about these different potential landmines or potential career-ending landmines that you need to be aware of so you don't fall into it. Some of them I fell into a lot of traps. I've seen other people fall into a lot of traps. I've seen people who made decisions that ended their career. So I want to make sure that I make this video to warn you guys about the potential traps, the potential landmines that could potentially be devastating to your career, to becoming a profitable day trader. And in reality, these landmines are always these traps are always apparent. They're always apparent even after you turn profitable. You can always make one of these mistakes that could potentially damage or ruin your career. So this is probably one of my most important videos, and I think it's very important for you guys to watch the end, because especially if you're a beginner trader, you need to know this. This could be the most important video that you could ever watch on day trading. And so let's get into it. The traps of day trading. The traps of day trading. What are the traps? So I have 7 traps here, not in any particular order, but we can go through them. The first trap is going to be copy trading. Copy trading is not the way to go. It's not the way to go, because ideally you want to get to a point where you are self-reliant in the market, to the point where you can sit down, you can have a process, you can find the stocks that you want to trade on your own without any help. You literally want to be able to do everything, make money in the market without relying on anyone, not relying on any specific live stream, watching somebody trade while you're trading. You need to get to the point where you're self-reliant, where you're able to find the stocks that you want to find using, scanner tools that you can make on your own. Also, being able to recognize patterns in the market, level 2, tape data. You want to be able to pinpoint entries and exits on your own. That's where you need to get to. So copy trading, while yes, it can give you that opportunity to learn from somebody else, but taking the same trade as somebody else, just buying and selling based upon somebody else buying and selling, isn't going to do you any good. It's not going to advance your career. It's not going to advance any knowledge. Pretty much what you're doing is literally copying somebody else that potentially may not even know what they're doing. Actually, they may or may not know what they're doing. They may not even be verified. So you're just sitting here trying to copy what they're doing by buying and selling, and you're not really getting any knowledge out of it. You're not developing a skill. Your mindset is more of a get rich quick, and that's definitely not the way to do it. And this is the trap that I fell into. I fell into this trap, copy trading a couple guys on YouTube, and it never worked out. It's because I am not them. So trading is one of the things where you can't replicate it. You can't replicate somebody else's trading strategy to a T. You need to develop your own. You need to develop your own strategy, because everybody's different. Everybody trades a different way. There's not any 2 people that I know I've ever seen that trade exactly the same. So you need to develop the knowledge and and the skills to be able to trade just using your own knowledge of the market, your own skills, and your own process to make money in the market. If you're relying on somebody else's skills, somebody else's decision making, you will never be able to be successful long term. And yeah, I tried copy trading and it never worked out. I lost money doing this, and it's not the way to go. It really prolonged my learning curve. It prolonged the learning curve. I was doing this for months. I fell into this trap for months. Never really got anywhere. I didn't really learn much. And I really could have learned faster if I would have just had more of a mindset of where I'm trying to develop my own skills to rely on myself. The second trap is bouncing between strategies. Bouncing between strategies. I see so many traders that get into this business thinking, they're trying to find the golden, like the golden strategy, or like the one thing that's going to absolutely change their career and change their trajectory and make millions of dollars. Just this one, EMA crossover strategy, or this dip strategy, or this, certain hold time strategy, or a certain chart pattern, or certain, people switching from stocks to options to futures, trying all this different stuff. Thankfully, I was pretty, I was pretty aware of this before, I fell into that trap, because in the beginning, I saw Ross Cameron making so much money doing this, and I was like, this is what I want to do. This is the strategy that I want to do, something like this. And that's where I eventually, found my success. But a lot of people end up doing this. And this is what they do. They find something they want to trade with, or they find a certain strategy they want to trade, let's say small cap scalping, and then for the first 6 months, and they try it for 6 months, and it's like, I'm not getting anywhere, I'm not making any money, I don't know what I'm doing, like, this is just not working, something's wrong with the strategy, or, it's not possible, maybe I should try something else. So they jump over to options, and they start trading options on the large caps or something like that, start trading Tesla options. And then they're like, oh my God, they try it for 6 months, and it's like, I can't get anything going. This isn't it. You can't make money doing this. Let's jump over to future. And they start trading ES mini future contracts and try that for 6 months. And it just never clicks. They never start making money. The problem is with these people who do this is that they're not giving themselves enough time to develop the skills and the fundamentals and the foundation to make money. That's the problem. It takes years. You can't just pick something up and be a master and start making money trading in 6 months. I don't know anyone who's done that. I do not know anyone who's done that. So, bouncing between strategies, it's not the strategy. People have made money in futures. People have a strategy in options. People have a strategy in small caps, in large caps. All of those areas, you can make money. So you have to find the one that you want to trade, find the specific strategy, the specific niche in the market that you want to trade, and stick to it. You have to stick to it for a long time. It's going to get hard. It's going to be the first 2 years, 3 years, 4 years, sometimes longer than that. You may not see success, but you have to continue pushing. And it's going to get to the point, at some point in your lowest part of your journey, you're going to be like, oh man, maybe I should try something else. This isn't working. But you have to fight through that. And as long as there's other people who are in that similar niche in the market and are making money, it's possible. It's absolutely possible. That's all you need to know. Is there other people in that niche, in that specific market segment in the stock market? Let's say, for me, small cap hyper scalping, low float stocks. There's lots of people doing very well. So as long as I see that, I see it's possible. That's all I need. I do not need anything else to continue pushing. If that's the specific strategy I want to learn, that's all I need. All I need to know is that it's possible, and then I can do it. But it just depends on the timeline that it takes for me to learn and develop the skills and the foundation to be able to do that. So another trap that fortunately I haven't fell into, but I've seen so many people fall into, is just bouncing between different strategies and not really developing or giving enough time to develop the skills and the foundation of the strategy to be able to make money with that strategy. The third trap of day trading, which I fell into so many times in the beginning, was bag holding. And this one can be detrimental. This one can knock you out. This one could be the end of your career. This one mistake here, this could end your career. This is critical. This one is critical to make sure that you have this one, so you don't fall into this trap, and that's bag holding. Bag holding is when you're holding onto a stock, holding and hoping, that it's eventually going to become a winner. And, I've held on to stocks that's pretty much just off of hope. Like, there's no strategy behind it. Just because I was losing money, I would just hold on to it for months and sometimes years, hoping that one day it would turn into the green. But only what happened, it would just got lower and 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 lower before the stock gets delisted. And that's happened to me before. In 2015, when I first opened my first trading account, I day traded what was supposed to be a small day trade. SUNE, Sun Edison Solar Power Company. So they sold solar panels. So I was like, all right, man, this could be pretty good. Let's see. It's renewable energy. I think that this is the next hot thing. So I jump on that bandwagon, thinking it's only going to be like a 1 day trade, like just a quick day trade. Nothing long term. And I get in, and then the next day it goes a little lower, and then a little lower, and I'm like, all right, gotta hold on, just hold on. It'll come green, and then months after months go by, years go by. I ended up selling it at like 10 cents a share, pretty much losing 95% of my investment, which was supposed to be only a short day trade. And I ended up holding that for about a year, until eventually now, I looking back, 4 years ago, I was trying to look up the stock, and it completely went delisted. It completely just... Actually, no, I held through the delisting. I held it onto the OTC market. I held that stock onto the OTC market. That's how bad of a bag holder I was. I didn't even want to sell when it got delisted. I said, oh, wait, it's going on the OTC market. Maybe by the grace of God, this thing could come back to $3 or $4 where I bought it at, and then I can finally get out green. But I ended up getting delisted to the OTC market till eventually the company just completely dissolved, and I lost everything. So that's what happened with that. And I made another mistake, that same mistake again in 2020. I bought XSPA. XSPA was Express Spa. I think it was called Express Spa. It was in the airports. It was a company that was in the airports that sold spa services, so like massages and spa treatments and stuff in the airport. This most stupid business idea ever. And I'm thinking, okay, well, COVID happens, everything shuts down. This stock's trading at like $2 a share. The stock's trading at $2 a share, and they put out an announcement that they're going to rename their company to Express Check. Because what they're going to do is check people and for vaccines. They're going to administer vaccines at the airport, because at the time you needed a vaccine to be able to travel, or you were going to need it. They were anticipating the government was going to have, you're going to need a vaccine to be able to travel, and so they're going to be the company that is doing, the vaccines, administering the vaccines and the COVID testing. Or no, you needed the COVID test. You needed the COVID test to be able to travel, and they were the ones administering the COVID test. And they were I was thinking, all right, these, like, they're gonna get that big old health insurance money. They're gonna be, they're gonna be huge. Like, this COVID thing is just, it's only gonna probably, thicken their wallets with everyone who still wants to travel or still traveling. They're gonna need to be able to get this COVID test to prove that they're negative. So I thought that was the next big thing. I did buy at like $2.50. It gaps up to $5 the next day. I literally make 100% of my money overnight. I'm like, holy crap! Like, this is where I got hooked on day trading, because I doubled my money overnight. I was like, ever since then, it's like, that's it. I need to figure this out. I need to continue to be able to do this. And eventually, I got greedy. I get back in at that $5 price range after it doubled. And I'm like, all right, we're going for 10. Like, this is going to 10. This is going to be huge. And, over time went $4, $3, $2.50, $2. I was holding and holding and holding and holding. It got so low. It was like 20 cents a share, 50 cents a share. COVID starting to, not be as, as much hype, everything is starting to die down a little bit as far as the COVID catalysts go in the stock market, and it just goes lower, lower, and lower. I eventually sell at 60%, 70% loss, which was only supposed to be a short day trade, turned into a multi-month, pretty much another year hold, losing about 60% or 70% of my investment. And that, again, that really held me back in my learning curve, because I still was trying to learn how to trade, but I had so much money tied up in that investment that I didn't even have funds to trade with, because I was holding and hoping, bag holding this freaking stock that would just go lower and lower and lower. There was a period in my time for a good 6 months. There's a period in my life for 6 months that I would wake up, and the first thing I would check is my phone and see that I'm losing money, and I would be suffering. Like, I was in these chat rooms on StockTwits with all these other people like me who was holding this stock, and we were just like, yeah, every day I wake up and I suffer. I wake up and I suffer because I'm losing money every single day because I'm not able to take my loss and move on. So I held that stock for so long, and it caused so much emotional pain that I probably didn't need to go through it, but I wish I never had to, because in the moment it was so painful. It was so painful. Every day I was just like, I was a wreck. Every day I was just losing money. I was like, well, there goes another $500 of the investment. Next day, $500 gone, $300 gone, just day after day after day after day, until I lost pretty much 70% of my investment. So blew up. That was pretty much a blow up account, and it did really prolong my journey, because I had money tied up in that. I had my emotions, my mind tied up in that investment, when I should have just been learning the fundamentals of how to trade, because I was still kind of learning the low flow, quick scalping strategy, but I didn't have any money to trade. I didn't have money to practice, and it really prolonged my learning curve. So bag holding, that could be a detrimental mistake. If you guys bag hold, it could be terrible. So do not hold and hope. Got to follow your rules. You got to cut the loss. You cannot change your strategy from, I'm going to cut it here at $3, and then you're letting it go by past that. Once you start letting it go past that $3 level, going lower and lower, your strategy is out the window. Your strategy is out the window. You have no discipline. You have no discipline to follow the rules that you had set in place. If you start adjusting your stop loss, then you might as well just take a stop loss off. Why are you even using a stop loss? At this point, you're just holding and hoping. So never get to the point where you're holding and hoping to make your money back. Just take the loss and move on. Take the loss and move on. You'll probably make the money back faster than if you just held and hoped. So, if I could go back, I would tell myself that. Just, take the loss. Take the loss. Move on. You're holding yourself back. Holding yourself back from learning how to trade. So, bag holding, be very, very careful with that. The next trap of day trading is the YOLO trades. The YOLO Wall Street bets trades. Got to be careful of that. I've seen, sometimes I browse on Wall Street Bets, and I see these massive losses. Like, I'm talking $250,000 losses, $500,000 losses on people who just throw their life savings on GameStop and at the high, and it eventually comes crashing down. Or Bitcoin, buying Bitcoin in 2021 at like 70K and riding it down to selling it at 12K or 15K or 20K, losing massive amounts of money on these YOLO trades. You can't do that. You cannot do that, especially as a beginner trader. Cannot you do the YOLO trades. This is not a get rich quick. This is not get rich quick. You can't put your whole career on one trade. You can't put your whole career on one trade. You always want to make sure that it would have to take, for example, a series of probably 300 losers. I would probably have to lose 300 times in a row for me to blow up my account. That's how much risk management skills that I have set in place, to where, it's not just going to be one loss. Likely, unless I'm breaking one of my rules. But if I'm following my rules, it's going to have to take like 300 or more losses to be able to knock me out of my career. And that's where you got to get to. You can't get to the point, you can't have, your risk management skills to where it's like, yeah, one trade, that's it, make or break my career. You know, one trade should never make or break your career. And that's why I do not follow these YOLO trades, because a lot of people who do these YOLO trades are not proven profitable. And if you're not proven profitable, you definitely should not be risking your life savings on a Wall Street bet. So next trap of day trading, by the way, the YOLO trade can be potentially disastrous. So be wary of that. That could end your career. That could be career ending. The next one is more of a mindset. So, you know, get rich quick. Get rich quick. Not a good mindset. A lot of people get into day trading thinking, you know, you're going to get rich quick. You fall for the marketing and the advertising of driving the Lambos and Tim Sykes, you know, trading on the Big Bend in Arizona, or, you know, trading somewhere in Costa Rica or Bali, and, you know, seeing people like, you know, doing all this crazy stuff, and they attribute it to day trading. But that isn't an overnight process. They're selling the dream. They're selling, you know, a dream that you can just wake up and, you know, within 3 months you can be a successful trader and do exactly what they're doing. But truth be told, they just want you to buy their course to fund their life, you know, their dreams. They're selling that idea that you can get rich quick to be able to do what they do, but they're making money off of the course. They're making money off the course and using that as a marketing tactic to get you to buy. So don't fall for that. Don't fall for that get rich quick scheme. The marketing strategy is very apparent in the day trading community. So, you know, they're playing you know, they're playing mind games. They're playing mind games. It's not truly, it's not the true experience of a successful day trader. The true experience of the successful day trader takes years and years and years to master. It takes years, and it's a craft. It's a craft. It's a sport. Just like anything else, like becoming a professional football player, soccer player, basketball player. You know, these guys, you know, Olympians, like they've been training for years, 10 years, 15 years, sometimes more than that, to be able to showcase their skills at such a high level. Same thing with trading. It's not going to be 6 months. So you have to get rid of the get rich quick mindset that these people online sell you. It's just not true. You're not just going to buy their course and in 6 months be able to make a full-time income from Bali. It's just not. Most like, I'd say it's possible. I can't say it's not possible because it definitely is possible, but the chances are like 1%, 5%, maybe. Okay, I would say 1%. I'd say 1%. I'd say it's 1% of people that maybe could do that, and I don't. I guess it's up to you. I mean, I guess it's up to you. To get rich quick, though, you're definitely, if you have that mindset, you're definitely not giving yourself the best chance. Not giving yourself the best chance. Because if you're thinking you're going to get rich quick, you're going to give up so soon. You're going to give up at 6 months. And you may not be that 1%. Chances are you're not that 1% that's going to be able to pick it up in 6 months to be able to make a living on the beach in Bali. Chances are that's not you, and by the time you get to the 6 month mark, you're going to give up because you thought it was going to be get rich quick. So the get rich quick mindset is another trap. So the next trap here, the sixth trap, is sizing before you're profitable. Sizing before you're profitable. This one can really set you back mentally and in your confidence. I've seen a lot of people, you know, they've been doing great. They've been doing great on small size. Doing great on small size, but you know they don't have the proper foundation yet. They don't have the proper mental foundation, and they don't have the proper technical skills yet. They haven't developed it yet to be able to be consistently profitable. And before they're consistently profitable, they're already chasing the money. They're chasing the money and sizing up before they have the proper skills to be able to make money in the market. And again, this one could be detrimental as well. I mean, I've seen people who, before they develop their profitable strategy, you know, they're putting maybe 50K, 100K on the line, you know, trying to day trade or scalp these stocks, and you know, it just turns out to be disastrous. It's kind of similar to the YOLO trades, but it's more so for the people who, they're trying, they're developing a strategy, but they're impatient. Maybe they're getting impatient and they want to make money. Maybe they need to make rents, or they need to pay their mortgage, or they need to pay bills and all that stuff, and they're getting impatient. And so before they're ready, before they develop the strategy, they're pushing size because they have to make 1K this week to be able to pay bills, or they got to make a certain amount by the end of the month, and they're behind, and they need to start making money. So they start putting on bigger size to try to force the trades and force a development as a trader. And if they're not ready, if they're just not ready, they're just not ready, and they're gonna have a bad time. They're not going to see the results that they want to see if they're not ready. If they don't have the skills yet, if they didn't have the foundation yet to be consistently profitable trader, they're not going to be consistently profitable trader. So if you're sizing too big before you're consistently profitable, that is another trap of getting into day trading. So be aware of that one. And the last one I have here is borrowing money. So borrowing money. So if you want to fund your day trading account, if you need a PDT account, you need $25K, $25,000. That's a lot of money. That's a lot of money for sure. For most people, even for me, and for a lot of people, that's a lot of money. 25K. It's the average person does not have $25,000 sitting in their savings account to put in a day trading account. So how do we get that money? How do you get that money? Some people, pull out, credit cards, for an advance, cash advance. Some people take out a loan. Some people borrow money from friends and family. And this could also be a trap of day trading. If you don't have, if your friends and family, that could potentially ruin your relationship with them if you're not able to pay them back, or if something happens to that money, something that could completely ruin your relationship with them. Also, if you're borrowing money from the bank, let's say you lose that money and you can't pay that money back, and now you have $25,000 in debt with the bank, and you're trying to pay that, and that may take years to recover from that, to pay that 25K back. Or credit cards, that can completely ruin your credit score if you're not able to make your payments, your minimum payments on the credit card. And the credit score is actually going to go down, because even if you can make the minimum payments, your credit utilization is for $25,000 or whatever you need, 10K. Let's say you only need 10K for it. Your credit utilization is going to be so high that's definitely going to impact your credit score. So there's a couple traps in there. If you're not able to fund your trading account and you have to borrow money, that could potentially be a trap if you're not ready for it. If you're not, if you don't have a solid strategy and you're not completely sure if you can pay it back, that's a potential pitfall that could really definitely strain relationships and ruin your career. So as far as borrowing money, I'm pretty against it. I'm against it, borrowing money. I would say if you have a family member that I don't know, that's even tough. I don't even want to say it. I don't even want to say to borrow money from your family, because that, in a way, your family member is more valuable than the money that they give you, and if you could potentially ruin their relationship, maybe that's not the best way. I think the best way is to figure out a way to make that 25K. You gotta fund that account on your own, and that way, you don't have to worry about paying anyone back. So what I would advise, if you need the money to fund the account, work your ass off. Get 2 jobs, get 3 jobs, do whatever you can. You got to do whatever you can to make money. It's, over time, maybe you can make that 25K, with extra jobs. I think within 6 months, you can probably make an extra 25K. If you're really hustling, you got to really hustle. You got maybe work 2 jobs, 3 jobs, try to learn trading, on the side, and then also have your main gig, and then you also have maybe another side gig, maybe working nights, or working in the morning or early in the morning. There's always a way to make a little bit more money, I find. But yeah, I would definitely advise to if you can, do your best to try to fund it on your own, just so you don't fall into that trap of potentially, ruining your life with credit. You're ruining your credit, or ruining, your relationships, or potentially owing $25,000 to the bank that you can't pay back. So I would definitely advise trying to make up, that 25K if you can. But again, they did change the settlement rule. So for cash account traders, you have a T+1 settlement. So even if you have like 10K, let's say you start with 10K. With 10K, you'll be able to trade 10K one day, 10K the next day, 10K the next day, because of the T+1 settlement. Before it was T+2. So the cash account traders had to divide their account into two. So instead of 10K I could trade today, I had to trade 5K if I wanted to trade the next day. So what I would do when I was a cash account trader was I was trading 5K on Monday. By the time that 5K settled on Monday, it would be Wednesday. So I had to split up in two. So the second day, Tuesday, I would trade the second portion of my account, which is 5K. And then on Wednesday, the Monday trades would settle. So I would trade that 5K on Wednesday. But now it's T+1, so you have that full 10K to trade every single day. So that could give you a good chance to kind of start building your account equity slowly, and trying to build your way up to 25K. And honestly, I would advise that. I would advise that way too. Maybe couple that with an extra job on the side, because as you're learning anyways, you don't want to have 25K anyways. If you're not a profitable trader, you don't want to have 25K sitting in your account. You don't want to be able to have that opportunity to blow up so much of your cash. So I would start with maybe a 5 or 10K account, and try to build that to the best you can. Once you start getting consistently profitable over months and months and months, then maybe start to add some more money. Maybe start to add some more money to get yourself to that 25K if you feel that you need to get to that 25K. Because once you get to 25K, you have instant settlement. And instant settlement means I can now trade $25,000 positions over and over and over again as much as I want for the whole day, because there's no settlement time. It's instant settlement. Whereas before, with the cash account, you have to wait for the next day for the cash to settle. Yeah, as you're learning, don't put too much pressure on you to get that 25K. Just try to build your account the best you can off of a small account, and then as you get consistently profitable, if you need to, start adding money to fund yourself to that 25K. And it's also good, if you do need that initial investment, if you don't even have 5 or 10K, saved up, definitely try to fund that yourself. And that's honestly more rewarding. It's more rewarding having it invested all through yourself, because it's you. That's your career. That's yourself. That's your hard work. It's your hard-earned money. And it's going to be harder. It's going to be easier to piss somebody else's money away than your own money. Your own blood, sweat, and tears of working, crap jobs to try to fund your trading account to escape wage slavery, whatever you're dreaming of. Everybody gets into trading for a reason, whether that be just for side income, or whether to escape the 9-to-5 slavery, wage slave, or to be able to live and work wherever you want, or have that extra freedom or time with friends and family, or have time with your kids. So many different reasons why people get into day trading, and that's your dream. So fund your dream. Fund your dream. I would definitely. I think it's more important that we have some skin in the game for ourselves, because that makes us take it more seriously. Maybe I wouldn't take trading as seriously if I was maybe trading somebody else's money. I'd just be like, what the hell, man? Like, let me just YOLO it all in and break all my rules to try to become a millionaire overnight. But because I funded my account with 25K of blood, sweat, and tears of working $15 an hour to make 25K to fund my account, you bet I am going to be taking this seriously. I am taking this seriously. That 25K is an entire years of work. That's an entire years of work, 40 hours a week. I'm not pissing that away. So, if you're funding it with your own money, I think it's better. I think it's definitely better. You're going to take it a lot more seriously than if it's somebody else's money, or if it's some like gift from a grandparent that passed away, or your parents or something like that, or maybe you got a nice, maybe your parents are rich or whatever, and they gave you $25K and they said, all right, go learn how to trade. I would piss it away. I would put it all on GameStop. I wouldn't care, but because it's my own, I'm going to take it seriously. So those are my list of the traps of day trading that you need to be aware of, especially for beginner traders, because some of these traps can be devastating. It can be career ending. So you got to be aware of this. I wish you the best of luck in your journey. I will be here for your support, always rooting you forward. Get involved in the Discord. Check out the links in the description. If you need formal education, check out MMU. The link will be in the description. And I'll catch you guys tomorrow on the recap. Peace.